All right, good morning, everyone. This is Monday morning. Happy Monday. It is a been a pretty difficult last few weeks in the market, as everyone knows. It's actually been a real difficult year to date in the market. I just heard from one of our research departments that we are in the top five worst starts to the year for the S&P 500 since its inception. So about 100 years of history there, and we are in the top five of the worst. Good news about that is that the preceding 12 months of the other four worst times in the history of the S&P has had an average return of 53%. Recovery for 53% positive return. So just continue to stay the course. History tells us things will get better. We are still very confident from all the research we have looked at that the market is going to be positive by the end of this year. Not only positive, but net positive, so above where we were before by probably 15 to 20%, where the S&P is going to be looking at anywhere between 5,000 and 5,250 for the year. The Dow Jones between 39,000 and 40,000 for the year. So very positive. The market will be doing pretty well here by year end. The reason why we think that is because fundamentals are very good in the market. For 6 quarters in a row, our country has produced the highest corporate earnings in the country's history, 6 quarters in a row. And probably this next quarter is going to be the same thing. So things are very healthy on the corporate earnings side, on the cash flow side. What's really impacting us is not Ukraine right now. It's not the war in Russia, at least not yet. Probably not going to be a huge impact on the market. What really impacts us is inflation. And inflation is impacting everyone at the pump, at the grocery store, everything. So we are still very optimistic about investing in things that are going to be impacted by inflation. So energy sector, material sector for stocks, real estate is a great place to be investing in. We have some really good REITs out there that are positive year to date instead of negative like the market is. Things like structured products that we can invest in that have hedging against inflation and hedging against the market downside. Another thing is commodities, so food and grocery type stuff. We're very optimistic that this is going to be the case, but we have to be patient. It might not happen tomorrow. It might not happen next month. It might not come back for a little while. Most midterm election years, we experience the market having a huge increase towards the end of the year, around the time of the election, not prior to that. Usually we experience a lot of volatility prior to that, and that's what we're experiencing right now. So we need to be patient. We need to keep on putting money into the market. We need to be buying low. It's a buying opportunity. We need to let things ride and continue on, and it will get better. But we just we're getting a lot of phone calls and things like that, and just want to make sure that everyone is aware that the market is a buying opportunity right now, and we're optimistic about it. All right.